After getting a funded account with the Funded Trader program, I have made around $56,000. All the withdrawal proofs are on my YouTube channel. Whenever I was getting the payout, I literally made the video of me showing you the process of how I am getting paid, how much money I made, how many trades I took. The purpose of this video is to show you that what's possible as a trader, how you can achieve this level, how you can start earning $10,000, $20,000 on your funded account every single month. So I have divided this video in three parts. In our first part, we're going to talk about the trader mindset. In our second part, I'm going to show you the exact strategy step by step that I use to trade on my account. Then in the third part, I'm going to show you the risk management that I have been using on my funded account. But before we do that, if you're new to the channel, make sure that you hit the subscribe button and turn on the notification bell. And also, if you want to start with the Funded Trader program, which is one of the top pro firms in the industry, I have added their website link in the description. Make sure to use my 5% special discount code as well. And if you want to learn from me how I trade, what strategy I use in a step-by-step manner, you want my assistance, you can join my mentorship course from the link in description as well. The most important thing when it comes to day trading, when it comes to being a successful trader, is not having a good trading strategy or not having a good risk management system. 90% of trading is all psychology. So once you have a good mindset, if you develop good habits, then and only then you're gonna be successful in the long term. You may have a good luck in 1 or 2 months, but if you do not develop good habits, if you do not develop a good mindset, then there is a high probability that in the long term, you're not gonna be successful. So what happens when I first did the FTMO challenge back in 2019, I was one of those traders who wanted to get rich quick. I knew that I have now got the funded account, so every month I'm gonna make thousands of dollars. But I did something wrong. After getting paid 2 or 3 times, I ended up blowing my funded account. The reason was very simple, because for me, it was something that is gonna make me very rich in a short period of time. I knew I am not risking my own capital. I knew my risk was only 540 euros at that time, which I spent on taking a $100,000 challenge account. After I completed, I got my refund. So I made few $1,000s with FTMO. I was very happy. But during that time, I developed a habit of chasing in the market because I was constantly chasing the money. So when you're constantly chasing the money, you're always gonna end up chasing the trades. When you see there is no trade opportunity, you will always force yourself to take the bottom trades. Now what do I mean by the bottom trades? When you will see there is no trade opportunity, you're just waiting, so you're gonna randomly take the buy position if the market is moving very fast in the upside, or you're gonna take the sell position if the market is moving very fast in the downward trend. So that mindset of me chasing the money was something that was forcing me to take the trades again and again. And after few trades, I ended up being in a drawdown. So it took me some time to develop a mindset, which I call mind over money, MOM. If you control your emotions and if you build enough self-discipline, then ultimately it's gonna help you. When I realized that every time when I am trading either a challenge or a funded account, most of the times I am always chasing the market just so I can make as much money as I can. But when I realized that I have to stop and I have to only take very rare opportunities that market is presenting me with a higher risk to reward ratio, with a better chance of that trade going into my favor, that was the time when my trading, it literally went from making $2,000-3,000 a month into well over making $20,000 a month. It took me few years. It was 2021 when I got the funded account with Funding Talent. That was my 4th or 5th funded account. That was when I started making big money because I knew what I was doing wrong. I developed that trader's mindset that I only have to trade when the market is gonna give me the opportunity. I started not chasing the market. I started to wait for the right time. I started to control my emotions when I was waiting. Remember one thing, money is being made when you wait for the trade opportunity, not when you take the opportunity. It's all about patience. It's all about controlling your emotions. It's all about controlling your greed. So you have to develop that trader's mindset that's gonna ultimately help you in the long term. And you need to stop chasing the market. You need to stop chasing the money. Now the second part of this video, it's about the strategy that I use. I cannot show you the complete strategy because it is gonna take hours to show you exactly how I trade. That is why I have the course. You can simply enroll into the course if you want to learn every single thing that I use. But just to give you the overview of how I trade in a step-by-step manner, I'm gonna show you the trade that I took few days ago on Euro New Zealand dollar pair, and I took this trade on my Fundit account. So that's the trade that I took on Euro New Zealand pair for the buy side. I took this trade and I pretty much made over 2.2 rewards from this trade. Now what were the reasons for me to enter into the trade? How many confluences that I had that made me think that there is a high probability that this trade is gonna work in my favor? Very first thing that I always do is I find the overall trend of the market. Now if this trade is gonna be taken on the 1 hour time frame, so for me to find the overall trend, I am gonna look at the 4 hour time frame. Now on the 4 hour time frame, we can see that we have this very recently broken market structure here. We broke this resistance level and ended up creating a higher high. Now it may not look a higher high to you, but if we just zoom out, you can see the market is going actually upwards for a very long period of time. Market is making higher highs, higher lows, higher highs and higher lows. And right after we broke this market structure here, this resistance that was here, we ended up creating a higher high, which is basically higher than the previous high. And if we just look at here, the market trend is definitely going to the upside. So that was first thing for me, find the overall trend of the market. I did that on 4 hour time frame. Now second step is that I always find where my higher high is made, and I then start to wait for the market to give me a pullback. I do that on the 1 hour time frame. So step 1, if I'm taking the trade on 1 hour time frame, go to 4 hour time frame, find the overall trend. Step 2 of my strategy, go to 1 hour time frame where I'm gonna place my trade. Look for highlight, mark your higher high area in case of the buyer's zone. In case of uptrend, mark the higher high area and start to wait for the market to give you the pullback. Now the main important thing is, as we have this higher high right here, so I knew that there is gonna be a pullback. Now there is a chapter inside my course, the Falcon Trader Mentorship, which is called ranges, and I show in that technique that how you can trade the ranges inside the trends. Now most traders that you see on the YouTube, they always say that do not trade the ranging market, and they are right, but there is one way to trade the ranging market if you have enough confluences. So for me this was the ranging trade, but I still did a buy position. So how I did it? So first thing, let's just say that we have this buyer's market. Okay, we have a higher high here, so I am waiting for a market to make a pullback. When the market is making a pullback means market is giving me a discount to buy, because we always need to buy low and sell high. So when the market is here at this higher high, it is already too high price, so I'm not gonna be buy from here, but I need a better price. I need some discount if I want to buy. So I wait until the market starts to make a lower low and lower high sequence on the smaller time frame or on the smaller scale. We have this lower low, then lower high, then lower low, then lower high, then lower low, and then lower high. And once it is reached at the area from where the market broke the market structure, which is basically the resistance right here, which I'm gonna show you in a moment. Once it is near to that level and market is already going down to create a pullback to give me the discount to make small lower lows and lower highs, I then wait until the market gets back again to the upside with strong momentum, clear out this lower high, and then I take the trade. And then I just simply wait for the market to give me one more confluence that it is gonna go up. Now what is that confluence? Let's say that market is going down, creating lower low, lower high, and then there are the strong buyers. I just wait either these buyers are real or not. How do I know? If market again starts to develop a struggling movement to the down, that means these buyers that we have got right here, they have significant strength that can turn the market from the down to the upside. And we already have big players standing here at the breakout area waiting for the market to give the pullback, to give them the discount so they can start buying again. So that is exactly happened here. So that is how I trade the pullback. But what if that market, when it makes a pullback, it does not give me any trade opportunity? Then I wait until I see that market is unable to go higher than this higher high and it starts to pull back again. When it starts to pull back again, that is the technique from inside my course, the Falcon Trader Mentorship. I literally wait until the market spikes this area from where the last time sellers stopped and buyers took control again. I literally wait for the market to spike down this area, creates a same movement, and then I literally take the trade right after I see a price slowing down. I take the trade, I put my stops, I put my target at the higher high. Now let me show you how the market developed the structure. So here you can see we have this big movement. Sellers made a pullback, buyers went up, sellers made a pullback again, buyers went up, sellers made a pullback again. The moment when we reached near to our breakout area, buyers started to go up. So when they were going up, as I said, I wait until they cleared the previous lower high, which is right here. And then I look for a market to give me a discount, or we can also call it a slowdown movement that will confirm that these buyers, they are real. But this time they never happened, and instead buyers just started to go up. So when they were going up, I waited to see how they are gonna go to the higher high high area, whether they will cross it or not, whether they will break this market structure and create a new higher high or not. But they did not do it. So when they did not do it, I knew that there is a high probability that market is gonna come lower than this area from where the last time sellers stopped and buyers took control inside this big buyer's trend. So that exactly happened. We can see market started to drop, lower low, lower high, lower low, lower high, lower low, lower high, spike down, took out all the buy positions from here. People who were buying from this levels, this level, this level, they took out all the buy positions. They turned literally people into the sell side, spiked up, and what happened? Buyers consumed all the movement that was happened from the sellers. So when that happened, I just waited for the market to slow down because I wasn't gonna buy from this price level. It was too high again. I wanted a better risk to reward ratio. I waited until the market came down to the area of the low of the range, because now we have went into the range. We can see that market has been consolidating on the 1 hour time frame for quite some time. So I waited for the market to slow down a little bit. I took the buy position. I put my stops just lower than from where the spike happened and put my take profit at the high area, which is right here, and that was exactly my trade with 2.21 risk to reward ratio. So that's how I trade. I just tried to show you a simple step-by-step strategy. I hope that you understand. Now let's talk about the risk management system. So part 3 of this video is about risk management. Now you have to develop a certain risk management system for phase 1 of the evaluation. You have to develop a certain risk management system for phase 2 of the evaluation, and you then need to develop a certain risk management system for the funded account. What I recommend, believing that you have a good trading strategy, you know how to trade, you know when to trade, you know when to stop trading, you know how to control your emotions, your greed. Considering that, then you should be risking 1% maximum when you are on the phase 1 of the evaluation. Let's take an example of the funded trader evaluation. I took the $400,000 standard evaluation. Now in that standard evaluation, you have to make 10% in 35 days. So if you have to make 10% and you get 35 days, which are calendar days, I recommend that you're gonna be risking 1% per trade, because you have to look from the risk to reward ratio perspective. You need to target 10 rewards overall in 35 days. So you should be risking 1%. If you are risking 1%, what's gonna happen? Let's say that you lose 2 or 3 consecutive trades in a row. If you lost 3 trades in a row, that means you are down 3%. But on your 4th trade, if you are still following your strategy, if you are still controlling your emotions, then on your 4th trade, you get a trade opportunity that is giving you 1:3 rewards. You're gonna literally be back at break even. You're gonna recover that 3% loss that you made in the first 3 trades. So having a good risk management system is very important. You're gonna need to pass the 10% profit target objective, which is hard. I'm not saying it's super easy. If you are risking 1%, you have to make sure that you're only taking those trades that have the higher probability of going in your favor, and you only need to target a better risk to reward ratio trade, 1:2 or 1:3, and you just need like 3 or 4 trades a week. And I can guarantee if you do this, you're gonna easily pass the phase 1 of the evaluation. Once you pass phase 1 of the evaluation, phase 2 is super easy. Only if you follow your trading plan, only if you follow your trading strategy, and if you still follow a good risk management system. Now in the phase 2, you should be risking not more than 1% at all. Your risk should be like 0.6, 0.7%, 0.8%, or max 1%, because in the phase 2 of the evaluation in any firm, your target is to make 5% in 60 days. So it's better that you limit your risk, or you lower your risk a little lower than 1%, as you only are required to make 5% and you get 60 days. So in case if you start rushing out the process, you think that okay, I just need to make 5%. If I made 10% in 30 or 35 days, then making 5% in 60 days, it is gonna be super easy. What's gonna happen? You will try to complete that phase 2 in 1 or 2 days, and that's gonna make you fail the evaluation. And there is a reason why you get 60 days to just make 5%, and why you have to make 5% in the phase 2, because this is designed in a way that you will literally rush out. You will try to complete the phase 2 as soon as you can, because now you are looking at that $100,000, $200,000 figure that you're gonna get right after completing the phase 2. So remember, I said you have to develop a trader mindset, because this is what you need to control. If you control your emotions when trading, if you have enough self-discipline, you know what you need to do, you know how important it is for you to stick to your trading plan and to have a good risk management system, then it's gonna be super easy for you to control everything around you. So make sure that you do not rush out the process, and you do not go more than 1% or even 1% per trade in the phase 2 of the evaluation. Now that's stage 1 of the evaluation. Stage 2 of the evaluation. The problem comes when you get the funded account. Most traders, when they get the funded account after completing the evaluation, they literally blow their funded account within a week. Yes, within a week. The problem is they have the funded account now. They are looking at $100,000 account, $200,000 account, $400,000 account. They know 1 or 2 trades are gonna make them $10,000-$20,000 profit. So they are gonna be risking a hell amount of money on every single trade that they will be placing. If they are risking 2% on a trade, and that's the first trade on their funded account, and that trade goes into the drawdown, it hits your stop loss, you are dead. You have started the funded account with the drawdown. That's gonna affect you psychologically very bad, because you have been given a funded account just a day ago and you over risked on your very first trade. So what's gonna happen, there will be a chance that you will try to recover that loss and you may start revenge trading because of that. If you start doing that, there is a high probability that you're gonna end up losing that funded account. So my recommendation, only risk 0.4% or 0.5%. 0.5% should be the maximum risk per trade on your funded account. I never risk more than 0.4%. All the profit that I have made in my last 2-3 years of me trading with the prop firm industry, and my profits, they are more than 6 figures. I should tell you that you should not be risking 0.4 or 0.5%. I never do that. So that was the video. I tried to show you how I actually made well over $56,000 with the Funded Trader program. I wanted to share my honest experience with you. I wanted to give you the insight of the trader's mindset, to show you my trading strategy, to show you my risk management system. If you guys need any help, you can simply just let me know in the comment section. Thank you for watching. I will see you in the next video. If you are not a subscriber yet, make sure to subscribe.